The psychology of trading, especially the struggle between fear and greed, is not something you conquer once and move past. It is something you learn to manage repeatedly as markets change and as you change, because fear and greed are not flaws in your character. They are survival instincts operating in an environment they were never designed for. After decades in the market, through booms that made people reckless and crashes that made people freeze, I can tell you this with certainty: every meaningful loss I ever took was rooted not in a lack of knowledge, but in fear or greed, quietly overriding a process I already understood. Fear usually shows up first, and it shows up in subtle ways. Early in my career, fear didn't feel like panic. It felt like caution. I would exit winning trades too early because I was afraid to give profits back. I would hesitate on valid setups because the last trade had lost money. I would move stops just a little because being wrong felt heavier than following my plan. Each of these actions felt reasonable in isolation, but together they destroyed expectancy. Fear rarely tells you to do something obviously stupid. It tells you to do something that feels safe in the moment, but damages you over time. Greed is more deceptive. Greed doesn't feel reckless. When it first appears, it feels justified. It tells you to size up because this setup is perfect. It tells you to hold just a bit longer because the trend is strong. It convinces you that this time is different, that you're finally in sync with the market. Some of my worst drawdowns began after my best weeks, not because I changed strategies, but because greed quietly relaxed my standards. I stopped being selective. I stopped respecting risk. The market didn't punish me immediately, which reinforced the behavior, and by the time the punishment arrived, the damage was already compounded. What took me years to understand is that fear and greed are not opposites. They are partners. Fear after losses leads to hesitation and missed opportunities. Greed after wins leads to overconfidence and oversized risk. Together, they create oscillation, big emotional swings that make consistency impossible. The goal of trading psychology is not to eliminate these emotions. That's impossible. The goal is to flatten their influence so that behavior remains stable, whether you're winning or losing. One of the biggest breakthroughs for me came when I realized that fear and greed are amplified by uncertainty about rules. When you don't know exactly why you're in a trade where you're wrong and how much you can lose, emotion fills the gaps. Clear rules reduce emotional volume. Vague plans amplify it. Every time I felt strong fear or greed, it was usually a sign that something in my process was unclear or negotiable. Another critical realization was that fear and greed feed on size. Small positions create small emotions. Large positions create large emotions. This sounds obvious, but most traders underestimate it. They try to manage fear and greed mentally, while ignoring the fact that their position size is overwhelming their nervous system. Once I sized trades so that a loss was annoying rather than threatening, fear lost much of its power. Once wins stopped feeling euphoric, greed stopped driving my decisions. Psychology improved not because I became stronger, but because I became more realistic about my limits. Fear and greed are also time-dependent. On lower time frames, feedback is constant, which intensifies emotional response. Every tick feels important. On higher time frames, noise is filtered out, and emotions calm naturally. This is why many traders find psychological relief simply by slowing down and aligning their time frame with their temperament. There is no moral superiority in fast trading if it consistently triggers fear and greed. The right speed is the one that allows you to follow your rules without emotional interference. Over the years, I noticed that the traders who handled fear and greed best were not the most confident ones, but the most structured ones. They knew exactly how many trades they were allowed to take. They knew when they had to stop for the day. They knew how much they could lose before size came down automatically. These rules didn't eliminate emotion, but they prevented emotion from becoming action. That distinction is everything. Another hard lesson was learning that fear and greed spike during transitions, not during stable periods. When markets shift regimes from calm to volatile, from trend to range, from optimism to panic, rules that worked yesterday start to feel uncomfortable today. This discomfort is where fear and greed scream loudest. Traders who mistake that discomfort for opportunity often pay heavily. Traders who recognize it as a warning sign slow down, reduce exposure, and wait for clarity. Patience here is not passive, it is defensive intelligence. As I matured, I stopped judging myself for feeling fear or greed. Judgment adds another emotional layer that makes things worse. Instead, I treated these emotions as signals. Fear told me I might be oversized or unclear. Greed told me I might be overconfident or pressing too hard. These signals didn't require suppression, they required adjustment. Size down. Trade less. Revisit the plan. When I responded this way, emotions softened on their own. And this is where the conversation needs to continue, because understanding fear and greed conceptually is only the beginning. The real change happens when you build specific habits, rules, and environmental constraints that prevent these emotions from hijacking execution. In real time, especially in fast markets, and during winning or losing streaks. And that transition from awareness into control is exactly where we go next, as we move from identifying fear and greed into learning how to neutralize their impact through structure rather than willpower, and why traders who rely on motivation alone eventually lose consistency, while traders who design around their emotional limits survive and compound. And that is where we continue next, as this sentence carries forward into the practical framework for overcoming fear and greed in day-to-day trading decisions without trying to become emotionless or superhuman, but by becoming disciplined, realistic, and aligned with how the human brain actually works under uncertainty and pressure, by replacing emotional negotiation with pre-commitment, because fear and greed are persuasive only when they are allowed to speak during decision time. And the single most effective way I learned to neutralize them was to make every important decision before money and momentum entered the equation. The first habit that changed everything was writing my rules as if they were contracts, not guidelines. Entry conditions, maximum risk, stop placement, profit-taking logic, daily limits, all defined when I was calm and respected, even when I wasn't. When fear whispered, "Get out now," or greed argued, "Just one more," there was nothing to debate. The decision had already been made. Structure did the work that willpower never could. The second habit was using size as an emotional volume knob. I stopped trying to think my way out of fear and greed, and started sizing them out of existence. When I felt fear spike, I reduced size automatically. When I felt greed after a winning streak, I reduced size again. This sounds backward to most people, but it is exactly why it works. Small size keeps the nervous system within tolerable limits. Within those limits, discipline is easy. Outside them, discipline becomes heroic, and heroic discipline is not sustainable. Once I accepted that my emotions were proportional to my exposure, psychology became a risk management problem, not a personality flaw. Another critical practice was installing forced pauses. I built delays into execution, so emotion could not turn into action instantly. Writing the trade rationale before entry. Waiting for candle closes instead of anticipating. Standing up before placing an order. These pauses were not about slowing trading down universally. They were about interrupting impulsive loops. Fear and greed thrive on speed. Interrupt speed, and their influence collapses. Over time, the pause became automatic, and with it came better decisions and fewer regrets. I also learned to cap both sides of the emotional spectrum. Most traders focus on limiting losses, but they ignore limiting wins. I set rules for what happens after strong days or weeks. Fewer trades, smaller size mandatory review. This prevented greed from turning success into entitlement. Likewise, after losses, I limited activity and exposure to prevent fear from turning caution into paralysis. Emotional symmetry was the goal. Wins and losses were allowed to exist, but neither was allowed to change who I was as a trader. Environment mattered more than I wanted to admit. I removed triggers that amplified emotion, constant P&L updates, social media commentary, non-stop news. I scheduled when I looked at results and when I didn't. I separated analysis from execution physically and mentally. When the environment stopped screaming, my mind stopped racing. Fear and greed don't appear in a vacuum. They are often responses to overstimulation. Reduce stimulation, and you reduce emotional volatility without trying. One of the most powerful reframes was treating fear and greed as diagnostics. Fear usually meant I was oversized, unclear, or trading the wrong time frame. Greed usually meant I was overconfident, trading too frequently, or confusing recent success with edge. Instead of judging these emotions, I listened to them and adjusted inputs. Size down. Trade less. Tighten criteria. When the adjustment was correct, the emotion faded on its own. That feedback loop taught me more about myself than any book ever did. Over time, consistency emerged, not because I became braver or calmer by nature, but because I stopped letting emotions vote. They were allowed to speak, but not to decide. That distinction is the entire game. Traders who chase emotional mastery exhaust themselves. Traders who build structural mastery endure. And that is the real path to overcoming fear and greed. Not suppression, not motivation. Design. If this lesson resonated with you, I invite you to subscribe to the channel so you can keep learning how to trade with structure instead of stress, and leave a comment sharing which emotion you struggle with most and which rule you will put in place to neutralize it, because clarity decided in advance is how psychology stops being a weakness and starts becoming an edge that compounds quietly over time.